Hello friends, this is Strifor and welcome to the Market in 5 Minutes segment. In this segment, we briefly and without fluff cover the most important information about financial markets. This information will be enough to get familiar with the market and begin studying it. In this video, we will provide an overview of the stock market. Before we start, we kindly ask you to subscribe to our channel and enable notifications so you don't miss any of our other useful episodes. The history of the stock market began with the establishment of the first official stock exchange in Amsterdam in the year 1602, where shares of the East India Company were traded. Since then, stock trading has passed through the era of industrial boom, the Great Depression, and reforms, before transitioning to the modern stage. With the development of technologies and the internet, as well as the introduction of electronic trading systems, the stock market became accessible to millions of investors worldwide. The emergence of ETFs, CFDs, and algorithmic trading opened new opportunities for speculation and long-term investing. The stock market is a place where shares of companies are traded. By purchasing a share, an investor becomes a co-owner of the company and gains the right to participate in the management of the company through voting at shareholder meetings, as well as a share of profits in the form of dividends. Shares are traded on organized exchanges, which ensures transparency and liquidity of transactions. In addition, there is an over-the-counter (OTC) market, where securities of companies that have not gone through the rigorous listing process or less liquid assets are traded. However, investors mainly focus on trading on major exchanges, where strict standards and regulations are enforced. Shares can be classified by economic sectors: technology, healthcare, energy, finance, consumer goods, and others. For example, shares of technology companies, Apple, Microsoft, Alphabet, often demonstrate high growth rates but also greater volatility, while companies in the utilities or consumer goods sectors are generally less susceptible to sharp fluctuations. Shares are conventionally divided into various categories. For example, blue chips, large stable companies with a high market capitalization. Growth stocks belong to companies with high growth rates, often not paying dividends. Dividend stocks provide a steady income stream through regular payouts, which is especially important for investors seeking passive income. The price movement of a stock is influenced by numerous factors. First and foremost, it's the key financial indicators of the company: revenue, net profit, debt load, and growth forecasts. Companies with stable financial indicators and growth prospects attract more interest from investors, leading to an increase in their market value. An equally important factor is macroeconomic conditions. Economic growth, interest rate changes, inflation, and central bank decisions significantly affect the market. During periods of favorable macroeconomic conditions, stocks may show growth, while in times of crisis they may decline. Here, the classic law of supply and demand comes into play. The balance between buyers and sellers directly determines the price of stocks. High demand can lead to a price increase, while an excess of supply may cause a price decrease. News and corporate events also affect stock prices. Quarterly reports, merger and acquisition announcements, changes in leadership, lawsuits, and other events can significantly influence market sentiment and, consequently, stock dynamics. For traders seeking high flexibility and quick transactions, trading CFDs on stocks is of particular interest. CFDs allow speculation on stock price movements without actually owning the stocks, which reduces transaction costs and simplifies the risk hedging process. However, it also increases risks, especially for beginners. With Strifor Broker, you can make CFD trades on stocks and other financial markets under competitive conditions. Subscribe to our channel, like our videos, and share your thoughts in the comments about the future of the stock market. See you in upcoming reviews.